All right, welcome back for another episode of Carnivore Trades. Today is Monday, October 17th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, so big update here for the market. S&P up 2.6, triple Qs up almost 3.5 here, Dow up 1.85%. So a nice broad-based rally here for the market. You see the Russell up strongly as well. And right now, it looks like the bulls are trying to flag the market here. So if we kind of just flip onto an hourly, you can see that we have some nice consolidation. This is a good consolidation pattern above the 150 and 20 moving averages there on the hourly, and it's consolidating beneath this resistance zone. So take a look here at the high going back to last week, that gap down there. Actually, it was the previous week there on Friday. And, you know, the high of the day was right around 369 on the spiders. Then we had the big CPI reversal, obviously, everybody remembers. And then high of the day on Friday after the gap up was 368.53. We're now just consolidating right beneath that. So right now, I'd give the bulls kind of a short-term bias here. I don't know if we move up too much more before the close, since we've had such a big move so far today. But, you know, if we gap up tomorrow, I mean, you got to figure the shorts are going to run for the hills, at least, you know, going into tomorrow and the rest of the week. Remember, it is Options X week, monthly OPEX for the month of October. And a lot of puts have been bought ahead of time. A lot of puts were bought into the whole Thursday. A lot of puts bought on Friday as well. Now, that doesn't change the fundamental structure of the market here. So I still have the same, you know, kind of sell the rip mentality right now, but that doesn't mean we won't get rips, right? So short term, we're kind of looking, you know, market looks strong here. Volume is light today, by the way, so that doesn't indicate, you know, any institutions are buying in any sort of major way here. But you do have hourly consolidation, and that needs to be respected right now. It's below resistance. Again, we kind of got rejected this morning at that daily 20 MA. So right in this area here this morning, we tagged that 20 MA again. And, you know, basically we're just right near that downsloping trend line right beneath that as well. So if we break that, next level is right up here to about 378, 380 on the spiders. I was just showing this to my members as well. So if you look at the ES here, and we just flip over to an hourly. And one thing I like to do, I love these pullback patterns here. Let's get a fib on there. So you just take a fib from the low, the CPI low, to the high of Friday, and you pull it back. We went right to a 618 there. We got a nice little bid, and, you know, just take a measured move. You add this, take this move and add it to here, and that takes you right up to about 38.20, 38.25. So somewhere in that area, which would coincide, you know, right in this area. So there's 3,800, 38.25 was, you know, basically the high from October 6th. So that's right in that pivot high zone there. And if we flip over to the spiders again, that's that 378, 380 sort of area. So that would be kind of your next logical stop for the market. And, you know, as long as we don't get any geopolitical news, I do think that is, you know, I would give that a good chance of happening, at least probably by, you know, if not the end of this week, then early next week. If that does happen, I don't think it'll be long lasting. I think it's more of a short-lived move. Again, nothing has really changed here with the market. You guys know I harp on this all the time, but this is so important. Look at the 2-year treasury here, and we're gonna look at the 4-hour. It is up 11 basis points right now, so, you know, it's getting a bounce. But take a look at the 4-hour here. You got, you know, dual inside bars there, you know, but really one whole just big inside bar inside of the CPI move. And again, we need to see the bond market bottom before stocks can bottom. That's just really the bottom line here. Otherwise, it's really the first time ever that stocks are going to lead bonds in calling the bottom of a bear market. That's not how it works here. So ultimately, yes, bonds are getting a little bit of a bounce here, but it's nothing compared to what stocks are getting. And that's just telling me that, again, just like we were saying all throughout August, you know, the 2-year is still selling off and the spiders are rallying. This is a sell the rip opportunity. And I think we're going to get another one of those here over the next week or so. But for now, you really got to respect the market here. And again, look at the volatility here. Look at the size of these candles going back to last month or so. And then just look at what we've got in the last couple of days. I mean, it's pretty amazing volatility, and even more so on the futures. I mean, look at the width or the length of these candles here. I mean, this is just incredible volatility. And even really, you know, a week or two ago. And this is an already epically volatile year as it is. And then you add, what's happening right now here. And again, this indicates liquidity issues. It indicates, if you guys followed the weekend video I did over the weekend for Jason at Wall Street for Main Street, I talked about that. That Goldman now estimates that 43% of all options traded are 0 day till expiration. I mean, there's just epic gambling going on. There's illiquidity. And this is the type of stuff that can happen before a major volatility event. Or, I hate to use the word, but a crash, there's no other word for it really. And that's what definitely has me concerned with this market here. But when you get these big up moves, it's because you have those major short squeezes. And again, that illiquidity, everybody trying to short the whole can cause them, but that doesn't change the fundamental structure and does not mean this bear market is over. So you'll get these big rallies, but I think that they're going to be sell the rip until we see the signal from bonds, until we see the signal from the VIX here. I want to see the VIX at least 38, probably 40, before I really start calling a bottom here, because we haven't had fear yet, right? We have not had, this whole move down. Yes, it's been a good sell-off, but it's been very controlled. You haven't had the VIX spike. You haven't had a major volume surge. We had a decent one Thursday, but this is not anything that I would consider major. I mean, it wasn't even bigger than January or February 24th earlier this year. So not a huge volume surge, and we're not seeing major capitulation yet. When that does happen, then we'll talk about a possible bottom, and we need to see bonds also confirming the move. But for now, decent consolidation here on the hourly. Let's take a look at the triple Qs. So same thing here. Nice hourly pattern here, inside bar, 7 candles up here, 7 green candles there on the hourly. And this is, poised for a nice move tomorrow. I would say, it's basically going to follow the spiders, but the Qs may only get to gap fill. So the Q is a little bit weaker. They're up more today because they're more shorted, so they're getting a bigger bounce. We also have tomorrow Netflix earnings we got to pay attention to. That's getting a nice bid today, so some short covering there. And then, of course, all important Tesla and ASML on Wednesday, so those will definitely be market movers, needless to say. Anyways, let's get into some sectors here as we usually do. So starting off, as always, with the semis. So again, semis up 2.3%. And again, lagging the market. Take a look here on the intraday. So gap up, market's holding the gains nicely. Semis broke through the opening range this morning and really just kind of stayed in this softer range. Now it's still holding up. It's not broken yet, but it's definitely not a leader. And you definitely want to see the semis leading to the downside or showing laggardship, which they are right now. So again, not a bullish signal here structurally for the market, and really just kind of an inside day there for the semiconductors. IGV, on the other hand, is holding up really well, and this is actually a really strong pattern. Again, a very nice hourly inside bar there. I do like Oracle here too as a nice one. That is also an IGV component. That is a very, very strong hourly inside bar pattern right on that 200 moving average. So that one could be a bull play into tomorrow for day trading purposes. But that's a nice little move there for Oracle and IGV. Let's take a look at the transport. So transport's also a nice pop here, and this is confirming now back above that trend line. So this has legs possibly to that 13.1 area. You got a gap window right at about 13,075, and then that level there right at 13.2. And again, just to show you, that goes back to January 2021, and then of course the gap fill above that, which I'm not convinced it can even get up there, but those are your levels there on the Dow Transport. So Dow Transport's holding up pretty well, so we'll give them the benefit of the doubt for now. Nice little pullback pattern too. So you have a down move. You could even make a case you got a 1, 2, 3, 4, 5 wave, and then here's your up A, B, and then possible C up pattern. So could be a little bit of Elliott theory there on the transports, but again, up 2.6% on the day. We'll give them the upside bias for the meantime. We talked a little bit about interest rates, but let's go over the 10-year. 10-year yield up 12 basis points today, so modestly higher. The 30-year here is up a little bit more, up just under, a little bit less, up just 93. And then take a look at the TLT here. This is getting hammered at another 52-week low. So again, I keep saying this, but bonds are not signaling that the coast is clear yet. Yes, HYG is up a little bit. It's very close to 52-week lows. JNK, really the same kind of thing here. LQD, again, looks a lot more like TLT. So again, bonds not showing the all clear sign yet, and that is one of my main things moving forward here, and has been for a while. So we got to pay attention to what bonds are saying. Anyways, let's get over to home builders. So XHB still up 2.7% on the day. stalling out at that 20-day moving average there. Just an inside day. Looks a lot more like the semiconductors, right? Got kind of a bounce and then really just stalled out in the morning. There's ITB as well, stalling out at that 20 MA. I do think VNQ could be a contrarian bid here this week. It's up 4%, and we can see by Friday, it's still held below that 618 there, but this is still so oversold that this might just get some type of a snapback rally. So this could have some upside. We're taking a look at the VNQ. So, maybe even up to that 83, 84 area. And if you get through that, there's a pretty good gap fill at 85.48. So that would be kind of your area. I wouldn't worry about the 20 moving average right now. That's kind of minor here. It's more of a short-term level just because we're so parallel to it. But, I could see this getting up to that 85 handle, especially given that it is OPEX week. And, if there's anything that people have been chasing puts on, it's this thing that's been absolutely slaughtered down from 102.50 to 75 in like a month. So August 16th, 2 months to October 13th. Pretty monumental fall there. So that could be an OPEX kind of squeeze candidate. So we'll keep that on the radar for later this week. But again, VNQ up 4% on the day and having a nice little relief bounce. XLF up 2.6, still not above Friday's high. Bank of America did report earnings, and that stock is behaving well. We got a gap above that 50 and 100 moving average, a little bit of a dip in the morning, and then just a nice little pop here into the afternoon. So up 6.5% there is BAC. So, maybe this could have upside to that gap fill. Around 35 here, but there's going to be a lot of resistance in that area, 35 to 35.50 on BAC, but it's holding up well today, so we'll give it the benefit of the doubt. XBD broker dealers here also getting a bounce, although much less so, up just 1.67% and still well inside of Friday's reversal candle. All right, shifting gears over to crude here. So energy, again, a little bit on the softer side, down 25 basis points is spot crude. Not a terrible pullback pattern here, still kind of holding that yellow trend line, and it's holding the 20-day moving average. If this does fade down, I would absolutely love it to get down to this blue trend line, although it will have some support at about 82 and then 80. So those would be your pullback levels there on crude. But for right now, just kind of hanging in there, and nothing really too new going on there, just kind of a pullback pattern there for spot crude at the moment. XLE also kind of an inside day there. So I do like how it put in a higher low, tried to bust through this trend line again, and you never confirmed it. Today we don't have confirmation, need to get back above that pivot high there, but it's hanging in there for now, so we'll give it the benefit of the doubt as well. It's still a very strong sector. XOP, same exact thing, same trend line break. And OIH also holding up as well. I want to see this one do more backing and filling, but OIH is actually hanging in there okay, and it's up 3% on the day. So again, getting a nice little bounce here. All right, nat gas here. Nice little dump on natty, so down 7%. Did leave a kind of an ugly gap, though, on the daily chart here, so we'll watch that. But I am watching this now. This is in play at 550, maybe a little bit lower. I will be a buyer of nat gas. If we get down there in the correct way, I want to see a pattern before we just jump on and anoint that level. But that is your target there. You have a head and shoulder pattern. If you measure that up, it lines up perfectly with about 530, 535, 550, somewhere in that area. But nat gas taking a hit, and again, we talked about this for weeks. It really just kind of went sideways, but you had the big move down and then sideways consolidation. That is bearish, so we're getting a little plunge here today on nat gas. So we'll look for that at this level, and we'll just kind of let it do its thing until now. So nat gas getting a little hit here, down 7.3% currently. Dollar index here, down a little bit today, down 1%, which should be a big move for a currency, but nowadays that's like run of the mill for the dollar, basically hovering at that 20 moving average. And it's hanging in there. So you have a possible little rollover. We need to break that 20. Next logical target obviously is the 50 and this upsloping trend line. I would love for a move back to 109.50. I just don't know if it can quite get there, because that would give you 3 levels of support. You got one pivot high, trend line, 50 moving average. I believe the 20-week moving average, 20-week moving average upsloping in that area as well. And then you have an inside bar low breakout level. So that's, really like 5 factors right there. So that could be a trade if we were to get there. But dollar index, all things considered, is holding up. So we'll just leave it at that for now. Gold had a nice day this morning. You see the GLD gapped up, and then it's just been a controlled algo sell all week long. Again, gold always seems to get hit during OPEX week, right? It's just always the case. And this looks like controlled selling to me. So You might be in for a little bit more of a pullback here in gold. Not really too much else to say. It's, tried to back test that 1675 area and got rejected. So it is in a daily or an hourly downtrend right now. We'll see what it does later this week. If it breaks the lows, I would actually like it to break the lows, because that would, I think, start the sell-off that I'm looking for it to finally bottom. But for now, we'll just leave it at that. It's fractionally higher on the day, and we won't make too much out of it. Silver is getting a little bit more of a bounce. So that's trying to reclaim that 1850 area, up 2.6% on the day, although that has also kind of faded off the highs here. You can see on the intraday, but really just a pullback pattern. And 1850, if that can hold on the upside, this can get a nice little bid here into, possibly tomorrow. Anyways, platinum. All right, so platinum up 2.12% currently. So again, trying to flag. I really wish I had picked it up here on this little pullback. Hopefully we can get one more here, but platinum looks really strong to me. Again, still the strongest out of the precious metals, and I really do like this pattern here on platinum. So I do think that can be bought on dips. Palladium also falling as well, just like gold and silver. So we'll see what that one does. This has been very range bound, so this does not have a very clear pattern to me. And then copper here also kind of just stuck in this channel for now, but let's see if it can put in a higher low, then it can get through that area, and you'd have upside to about the 370 handle. So we'll be on watch for that. All right, lastly, let's get over to see if we can get Bitcoin on here. Okay, there we go. So Bitcoin actually getting a decent little bid, so it's trying to put in higher highs. I'll flip over to the hourly for you. So it's trying to get, you had a little bit off the lows. We tested that trend line, and now we're trying to get hourly higher highs for the first time in really kind of a while here. So if this can take out that 20,000 level again, you'll have daily chart higher highs, which could give you, a chance to get up to, 20,500, and then ultimately, up to this red bar high here. But again, this is a little premature right now. Let's not get too crazy with it, but it's hanging in there. It bounced off that trend line, and it's just stalling out at these moving averages for now. So if the market does get a bid, maybe Bitcoin gets a bid, but I think the clock is kind of ticking on this. I really would have wanted to see it make a move by now, at least, especially once you got above this trend line. So again, you got the back test there. It's holding up for now, but we'll just leave it at that for the time being. Anyways, going to wrap it up here. Let's get back over to the spiders here. So market's about to close in about 1 minute here. So yeah, it's hanging in there for right now. We're getting a little bit of a pullback. Again, the market was up so much earlier today that it's really hard for it to continue pushing higher into the close. But we do have a very nice hourly consolidation pattern here, and we'll continue to watch that tomorrow. If we get a gap up, this thing could be a gap and go day tomorrow. So definitely be on guard for that moving forward. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.